Hey guys, I wanted to make this quick video because I found a very interesting opportunity and I thought that I should not miss the opportunity to talk about it. Now, you remember a few days back, I had presented this interesting company called Insperity. We did the overview video, and in the next few weeks, we are going to release the subsequent videos. Now, today I'm going to jump the gun a bit and I'm going to share with you what our thoughts on the range of valuation for Insperity is. Now, let me just share the screen and show you what we think. Now, as you can see, this is our rough valuation. And if I look at the very conservative price for, sorry, the very conservative value for Insperity, our estimate is around $59. So the range of intrinsic value for Insperity could be anywhere between $59, $60 to about the mid 80s, which is a reasonable valuation. And if we try to be slightly optimistic, we probably could end up paying a little bit more, close to $100. So the intrinsic value range can be anywhere in between. Now, over the last couple of days, because of the significant volatility that we have seen in the market, we see that the price of Insperity is right now trading at around close to $70. Now, this is not the opportunity I'm talking about, but because of the increase in implied volatility at this moment, if I direct your attention to the option chain of Insperity, let's see what we have. Now, this is the Insperity option chain. These are the options expiring on 20th of March, which is less than a month. If I want to position myself to buy Insperity at our conservative end of the valuation, which is around $60, I can keep the cash aside for a possible assignment and go and sell an option. Right now, the bid is 35 cents, the ask is 55 cents. So let's see what happens if I put in an order at midpoint, which is 45 cents. What kind of returns? If we do not get assigned, what kind of returns does this option give us? So let me take you to a Google Sheet. Today is 26th of February. Now, here I'll just demonstrate how we calculate the returns from an option position, from the option premium, assuming we are not getting assigned. Now, of course, if we get assigned, then that's a great situation where we get to keep the premium and we are also entering the stock at the lower range of our intrinsic value range. So that's a great outcome. Now, today is 26th February and the option is expiring on 20th of March. So if I want to sell the 60 puts today, and let's say I'm positioning myself to buy 1,000 shares, which means that I have to block $60,000 today. Now, remember, we do not like to take leverage. So if I'm selling a put, the put is always going to be a cashback put. We do not believe in selling naked puts. So I look at this $60,000 as an outflow today because I'm blocking this. Of course, I will probably put it in some short-term treasury, so I'm getting some yield there. And because of selling the put, today I'm bringing in these 1,000 shares multiplied by 45 cents because I said I'll probably just think of placing an order at the midpoint between bid and ask. So that gives me a $450 cash inflow. So my net cash outflow today works out to 60,000 minus $450, which is 59,550. And if I do not get assigned, if on 20th of March, if the option expires worthless, then this $60,000 is released. So this results in an XIRR. The formula is very simple. It is XIRR. And then I take this range D4 to D5, comma, and then C4 to C5, which is the date range. So the XIRR works out to 12.69. Now, this is how we evaluate the yield on the option premium yield on the notional value of the option. So think about it. Here, I'm positioning myself to purchase a business which I like at a price which is at the lower end of the intrinsic value range. And to position myself there, I'm also generating a XIRR of over 12% on the cash which I'm blocking. So that's not a bad deal at all. And these are the kind of deals which we absolutely like. I would normally not sell a put option unless I hit an XIRR of over 20%. I try to keep it above 20%, maybe around 24%. But because this will position myself to purchase the stock at a very good price, I might consider this trade. So I just wanted to share with you. This is not a recommendation. This is just to share the opportunity because the opportunity has just come up in the last couple of days. If you are interested in learning more about how to adjust your option trades, how to get into option positions that are completely aligned with your long-term investing, and also how to use Greeks to decide what is the best option for you to choose, and calculating the yield of an option trade appropriately, then I would encourage you to register for free on moneywisesmart.com/research. You will see quite a few videos on different option strategies that we have published already, and there are several videos that we are going to publish discussing these various concepts. So do register. It is free as of now. I also invite you to join our Facebook group. The link is provided below. The group is called the Investment Forum, and we discuss lots of very interesting investment concepts, concepts on options, as well as we share deep dive research on some great companies. So it's a community of no nonsense investors, and I definitely think that you'll enjoy the discussions going on there if you are a serious investor. And if you have enjoyed the video, do hit the like button. That keeps us motivated, and do subscribe to our YouTube channel. Also, don't forget to share the video with your friends. So thank you very much for your time.